perspective in the GTA in Toronto?
Not anytime soon. I mean, sales are up slightly over last year, but certainly we're not seeing lower rates.
Homes that once sparked bidding wars are now sitting unsold for months, their prices slashed by hundreds of thousands. In some Ontario cities, sales have plunged over 70% year over year, and investors who thought they struck gold are drowning in debt. Streets once buzzing with open houses are lined with fading for sale signs, while buyers stay frozen on the sidelines. The market that felt invincible has turned shaky, and the whispers of collapse are getting louder every day. So the real question is, how much worse can it get?
In Niagara Falls, right here, there's like 13 of these things in the same complex and more coming online. But first, I want to show you this chart from this week.
Niagara Falls from hotspot to headache. Niagara Falls was once the place everyone whispered about in the real estate game. Investors were scrambling to grab any house they could get their hands on, all dreaming of Airbnb riches. It had everything going for it. Tourists pouring in year-round, the lure of being minutes from the US border, and a reputation as the golden ticket for quick profits. People bragged about how their short-term rentals were covering mortgages and then some. But the party didn't just slow down, it came to a screeching halt. Those same investors who once gloated about easy money are now the ones panicking as their properties sit empty. The real trouble started when the Bank of Canada began hiking interest rates. Overnight, mortgages that once felt manageable suddenly doubled in cost. Those cash cow Airbnb units that brought in big bucks during peak season couldn't keep up with the rising payments. And with tighter rules cracking down on short-term rentals, the cash flow dried up even more. Add in a weaker tourism flow compared to the frenzy of the pandemic reopening, and the once glamorous Airbnb scene in Niagara turned into a financial nightmare. The same investors who were popping champagne just a few years ago are now quietly trying to offload their dream properties at a loss. Walk through certain neighborhoods in Niagara Falls and it feels eerie. You see rows of houses with for sale signs leaning on the lawns, some so faded they've been replaced more than once. These homes that once sold within days are now languishing on the market for months. The discounts are shocking. Hundreds of thousands slashed off asking prices, and still, buyers aren't biting. Locals gossip about the out-of-town buyers who swooped in thinking they'd struck gold only to get burned. Some owners can't even cover basic upkeep anymore. So you get streets with unkempt lawns, shuttered windows, and half-finished renovation projects abandoned midstream. It's not the booming neighborhood people thought they were buying into. The drama is juicier when you think about how confident everyone was. Investors bragged at dinner parties about their Niagara rentals, promising friends and family that this was the new frontier of real estate wealth. They didn't just think it would work, they believed they couldn't lose. And for a while it looked like they were right. Bidding wars were intense, properties shot up in value, and realtors couldn't keep up with demand. But when the cracks started to show, it wasn't a soft landing. It was a full-on collapse of confidence. The so-called sure thing has become a cautionary tale people whisper about in disbelief. What's even worse is how many people bought at the absolute peak, stretching their finances to the limit. Those owners are underwater, owing more on their homes than they're actually worth. And the buyers who once lined up for open houses, they're staying far away, waiting for prices to drop further. Realtors in the area will tell you off the record that open houses are so quiet, you can practically hear the echo of your own footsteps. The feeding frenzy has been replaced by awkward silence. Niagara Falls has turned into the textbook example of what happens when hype, speculation, and easy credit collide. Investors who thought they had found a money-printing machine are now facing the harsh reality of carrying costs they can't cover and properties they can't sell. The gossip in real estate circles is brutal. Stories of entire streets turning into ghost towns, of investors walking away from deals they can't close, of banks tightening lending in the region because the risk looks too high. The Airbnb gold rush didn't just fade, it blew up spectacularly. And the aftermath is sitting right there on the curbs of Niagara Falls, painted across every for sale sign that refuses to come down.
What is the overall sentiment there?
Yeah, I think a lot of the sellers have been kind of holding out hope for rate cuts that was going to stimulate the market, and we haven't seen it even with the most.
Brampton, the bubble bursts. Brampton used to be sold as the perfect escape for families priced out of Toronto. Realtors pitched it as the land of opportunity, big houses, diverse communities, and just close enough to the city to feel connected. The story was so convincing that buyers rushed in without hesitation. Detached homes that once went for under $1 million were suddenly flirting with $1.5 million or more by early 2022. People were convinced Brampton was the next unstoppable real estate giant. The hype was intoxicating, and many stretched themselves thin to get in, believing prices would only climb higher. But behind all the excitement was a market built on quicksand. The rise in interest rates exposed how fragile Brampton's boom really was. Borrowing costs ballooned, and those dream homes with massive mortgages turned into nightmares almost overnight. Families who thought they had locked in a future of equity growth suddenly found themselves gasping for air under monthly payments they couldn't sustain. To make matters worse, appraisals started coming in way below accepted offers. Deals collapsed, buyers backed out, and sellers were left scrambling. The panic set in quickly, and the once red-hot market began to unravel in a way nobody wanted to admit out loud. You can see the shift just by stepping into an open house today. The frenzy of packed rooms with buyers throwing out desperate offers is gone. In its place are half-empty showings, awkward conversations, and agents trying to put a positive spin on the silence. Some sellers are still clinging to old price tags, hoping someone will bite. Others have faced reality and chopped their asking price by 20 to 25%, just to spark interest. The bravado that once defined Brampton real estate has evaporated, replaced by a cautious wait-and-see attitude. It's a far cry from the wild days of bidding wars. What makes it all feel even more scandalous is how many people treated Brampton as an easy flip. Investors poured in, thinking they'd ride the wave forever, but speculation only works when there's someone else ready to pay more. That line has vanished, leaving speculators holding properties that don't cash flow and can't sell without a haircut. And for the regular families who bought in at peak prices, they're trapped in homes that may not regain their value for years. The conversations around kitchen tables aren't about upgrades or renovations anymore. They're about survival.
What is the overall sentiment there?
Yeah, I think a lot of the sellers have been kind of holding out hope for rate cuts that was going to stimulate the market, and we haven't seen it even with the most.
The market correction isn't just about numbers, it's about confidence. Brampton went from being hyped as the affordable alternative to Toronto to being the cautionary tale of the GTA. Realtors admit privately that the energy is gone, replaced by a heavy air of regret. Everyone is waiting for someone else to make the first move. Buyers are sitting on the sidelines, wary of catching a falling knife. Sellers are stubborn, holding out for prices that may never return. And in the middle of it all, the market sits in limbo, flashing warning signs in every direction. Brampton's crash isn't just a blip, it's systemic. It shows what happens when growth is fueled by speculation, not fundamentals. The gossip in real estate circles is merciless. Stories of buyers walking away from deposits, of families downsizing out of desperation, of lenders growing skittish about approving deals in the area. The boom that once looked unstoppable has turned into a mess that no one wants to claim ownership of. Brampton was supposed to be the safe bet outside Toronto. Instead, it's become the headline everyone whispers about, the bubble that burst faster than anyone expected.
Many of them are actually in some of these outer suburban areas that saw the biggest boom during COVID. They tend to have a high.
Pandemic dreams fade. Peterborough was once painted as the perfect escape for weary Torontonians. It had space, charm, affordability, and just the right amount of small-town calm. During the pandemic, it became a magnet for remote workers fleeing cramped city condos. Bidding wars broke out in neighborhoods that had never seen such chaos, and prices skyrocketed. Some homes jumped by more than 60% in just a few months. Realtors called it the new frontier, a city on the rise, and buyers swallowed the story whole. For a moment, it felt like Peterborough had transformed from a sleepy town into a real estate darling overnight. But the dream was short-lived. As interest rates shot up and companies started demanding workers return to the office, the fantasy of remote living began to collapse. Those buyers who had rushed in with wide eyes and big offers suddenly found themselves regretting their leap. The commute, once irrelevant, became unbearable for hybrid workers. Mortgage renewals hit hard, doubling payments in some cases. And the homes that once sparked frenzied bidding now sit on the market, collecting dust. What was once an escape hatch from Toronto's insanity has turned into a trap for over-leveraged buyers. Locals are watching it all unfold with mixed emotions. Many of them had been priced out during the frenzy, forced to sit on the sidelines while out-of-towners drove prices through the roof. Now, as listings flood the market and values fall, there's a sense of quiet vindication, almost an "I told you so" energy. But there's also concern Because the collapse doesn't just hurt investors, it shakes confidence in the whole community. Families who moved here during the hype are struggling, banks are tightening lending, and the town's reputation as a real estate safe haven is slipping fast. Realtors whisper about how grim things have gotten. Open houses are eerily quiet, the same faces circling week after week without making offers. Properties are being relisted multiple times with slash prices, sometimes by hundreds of thousands. Buyers who thought they were buying into a guaranteed win are facing negative equity, their dream homes worth less than what they owe the bank. For a city that briefly basked in the glow of being discovered, the reversal feels harsh. The optimism that once fueled Peterborough's rise has been replaced by doubt, hesitation, and a long trail of for sale signs. The scandal of it all is how quickly the tables turned. One moment, Peterborough was the place to be, the darling of real estate blogs and the backdrop of dinner party bragging. The next, it's a cautionary tale about believing the hype. The whispers around town are brutal. Stories of buyers forced to walk away, of investors scrambling to dump properties at a loss, of sellers holding out for prices that may never come back. The pandemic painted Peterborough as a forever winner, but reality is proving otherwise. The bloom is off the rose, and what's left is a market that feels more like a hangover than a dream fulfilled.
That luxury condo was in Midtown Toronto, a renovated 2-bedroom, 1,000 square foot with unobstructed Toronto skyline views in Summerhill.
The mirage of growth. Sudbury's rise during the pandemic caught almost everyone off guard. For decades, it was known as a mining town, gritty and hardworking, but hardly a hot real estate play. Then as Ontario's housing prices went wild, people started looking north. Sudbury suddenly became the hidden gem whispered about in investor circles. Buyers from bigger cities rushed in, thinking they had found the last affordable pocket in the province. Properties that once sat quietly on the market were being snapped up at prices locals could hardly believe. The story being sold was simple. Sudbury was the next big thing. But beneath all that excitement was a market with weak foundations. Sudbury's economy still leans heavily on mining, with little diversification to support long-term real estate growth. That didn't stop speculators, though. They poured in cash, betting on migration trends and the remote work boom to keep values rising. For a while, it worked. Prices ticked up, rental demand soared, and Sudbury was suddenly on the map in a way it hadn't been in years. Yet the reality was always fragile, and when the national economy shifted, it cracked fast. Interest rate hikes hit the city like a tidal wave. Mortgage costs ballooned and rental demand softened. Investors who thought their properties would cash flow forever began to struggle. Vacancies climbed and rents no longer covered rising carrying costs. The market that was supposed to provide stability instead turned into a financial sinkhole. Those who bought at the peak are now staring at values sliding backward, some watching their supposed hidden gem lose hundreds of thousands in equity. The rush of optimism has given way to whispers of regret. Walk through some of Sudbury's neighborhoods today, and the change is obvious. For sale signs have multiplied, many sitting untouched for weeks, if not months. Renovations once meant to attract high-paying tenants are abandoned mid-project. Investors who came in with bold promises are quietly backing out, leaving half-empty units and falling rents behind. The gossip among realtors is cutting. People who once bragged about finding the deal of a lifetime are now desperate to offload properties before losses deepen. It's not just a downturn, it's a reversal of everything Sudbury was supposed to represent. The scandal lies in how quickly the narrative flipped. One moment, Sudbury was the smart money move, the place savvy investors claimed would double in value. The next, it's a market people can't exit fast enough. Those who sold the story of endless growth are nowhere to be found, while the ones who bought in late are stuck paying the price. The talk in real estate circles is harsh. Stories of landlords slashing rents to fill units, of banks hesitating to lend in the area, of investors walking away altogether. Sudbury was never meant to be Ontario's golden ticket. It was a gamble dressed up as a guarantee, and now the cracks are impossible to ignore. What was hailed as a miracle growth story is looking more like a mirage that disappeared the second the heat turned up. Investors chased the hype, but in Sudbury, the hype has evaporated, leaving nothing but fading equity and bitter disappointment.
St. Lawrence Market, a 2-bedroom condo, steps to the financial district, bought for $1,031,000 in 2022.
From budget-friendly to buyer beware, Windsor once had the perfect pitch. It was cheap, close to the U.S. border, and had just enough industry to keep things stable. Investors loved it because you could buy a house for under $300,000 and either flip it or rent it out for quick returns. Families flocked there too, lured by the idea of bigger homes for half the price of anything near Toronto. During the housing boom, Windsor's reputation flipped from underdog to star. Prices skyrocketed, doubling in just 2 years. Suddenly, homes that were once a steal were selling for over $600,000. Everyone thought Windsor was finally having its moment. But like every too-good-to-be-true story, the shine wore off fast. When the Bank of Canada raised interest rates, Windsor's buyers dried up almost overnight. That once cheap mortgage turned into a monthly financial nightmare. Investors who thought they'd stumbled onto Ontario's best-kept secret were stuck holding overpriced homes no one wanted. The bargain city was no longer a bargain, and the hype collapsed. The real estate glow-up ended in an ugly reality. A glut of homes sitting unsold, prices slipping lower each month, and desperate sellers slashing asking prices to spark even the slightest interest. What made Windsor even messier was the flood insurance problem. Rising risks of flooding in the area drove premiums higher, eating into profits for landlords and raising costs for families. For investors banking on Windsor being a low-cost play, those unexpected bills became deal breakers. The gossip spread quickly. People who thought they'd struck gold were now complaining about houses they couldn't sell and tenants they couldn't afford to keep. The city that was supposed to be the safe bet turned into one of the riskiest plays in Ontario real estate. Drive around Windsor today and the signs of stress are everywhere. Properties sit unsold for a year or more, with price reduced slapped across their listings like scarlet letters. Open houses attract a handful of visitors, most of them just curious, not serious buyers. The buzz that once surrounded Windsor's market has vanished, replaced with whispers of regret from those who bought in at the peak. Realtors quietly admit that the market feels stuck, with too many listings chasing too few buyers. Sellers hold on, praying for a miracle, while buyers wait, convinced prices have further to fall. The scandal of Windsor's downfall is how fast the story turned. It was once marketed as the golden gateway to affordable home ownership. Now it's the city people warn you about in hushed tones. Investors who flooded in during the boom are cutting their losses and running. Families who thought they were getting a deal are buried under mortgages they can't manage. Windsor went from being the scrappy underdog of Ontario's real estate market to the perfect cautionary tale. The harsh truth? Windsor's so-called budget-friendly appeal was built on fragile foundations. Without sustained economic growth, without real wage support, and with rising risks like flooding, the city couldn't hold up under the weight of the speculation. The result is a market that feels abandoned, a place where the dream of easy wealth has dissolved into rows of unsold homes. What was once celebrated as Ontario's best-kept secret has turned into one of its most public failures, and the gossip swirling around it is only getting louder. So, what are your thoughts on this? Let us know in the comments below.